Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host Pushpendra Mehta. Joining me today are Jack Large, editor of CTMfile, and Ben Poole, writer at CTMfile. Welcome back, Jack and Ben.
Thanks, Push. Great to be here.
Good to be here too.
A note of gratitude your way, Jack and Ben, for taking the time to share your thoughts with us on topics that impact the world of cash and treasury management. It's time we dig deeper and get your thoughts on our topics for today, namely treasury liquidity management solutions, open banking, blockchain interoperability, multi-bank API integration, and the future of payment success. Our audience can read articles, interviews, and industry roundups by visiting ctmfile.com or by following the links in our show notes. Let's start today's discussion. Our first story for today is about GTreasury and C2FO partnering to provide treasury customers with a cash management and early payment solution designed to improve liquidity forecasting and optimize cash flow. Ben, you covered this news story for CTMfile, so I'll direct my first question to you. Ben, from a corporate treasury perspective, what do you think is the differentiating factor about this partnership?
Thanks, Push. Yeah, it's an interesting partnership that's going on here. I think it's just one of quite a few examples of integrations between technology firms that we're seeing in the market at the moment that actually can benefit treasurers, particularly with this one, who are looking to optimize their liquidity. So, for example, it gives GTreasury users access to C2FO's network of funding partners around the world, which is obviously quite an interesting door that's opening for them. I think we've seen quite a few different partnerships like this in the past 6 months, 12 months or so, as firms are looking for how they can probably best optimize their services. And I think we know that it's been a busy few months for GTreasury. Push, you wrote quite recently about the new influx of investment that the firm had received. That story's on the CTMfile website. And also earlier this year, GTreasury launched a global bank API connectivity suite, which is a topic that we might come back to a little bit later on in the podcast as well. That's also all about integrations, of course, speeding up access to banking data, trying to enhance cash management, payments, reporting. So what we're seeing is the impact that modern banking technology is really having on the treasury ecosystem. So I think anything that gives treasurers more options when it comes to their liquidity management has got to be welcomed.
Yeah, I think Terry Beadle is the global head of corporate development. His summary about this partnership will allow customers to extend their treasury workflow flows, I think, rather than just workflow, resulting in further optimization, management of their cash. That's essentially what treasury is all about. GTreasury have coupled together with C2FO, who there was an extraordinary resistance when they first launched, saying this is not possible. Now they have an established network of different ways of optimizing your cash flow. The interesting thing is going to be as to how GTreasury help their customers who go for this partnership, how they optimize the use of the combination. It's not going to be easy. There's going to be quite key decisions several times during the month, and they're going to have to get used to it. And it's going to rely a lot on the quality of the advice from C2FO and GTreasury together. Overall, I think it's a very good thing.
Our next topic is about UK's plan to boost open banking. The UK's Joint Regulatory Oversight Committee has set out a program of work to take forward recommendations for the next phase of open banking in the UK. This involves setting up dedicated work streams for the 6 key themes and priorities outlined in the recommendations. UK's Joint Regulatory Oversight Committee has launched 2 new working groups on variable recurring payments and a future open banking entity to support this. The Oversight Committee has also asked Open Banking Limited to lead and coordinate work streams on 4 other key themes. The committee says that this work is crucial in realizing the full potential of open banking in the UK. Jack, do you think the UK's Joint Regulatory Oversight Committee's work and recommendations will help realize the full potential of open banking in the UK?
Yes, and I really think it will. What impresses me about this is how they've broken up the problem to different areas. So improving the direct debit system, which is several decades old, and getting to the variable repeat payments infrastructure is one area which needs really dedicated understanding of the dynamics and the opportunities that are opening up, while at the same time preserving the fundamentals of direct debiting. That's one issue, while they've split it off from the other issue of the entity definition, because what happens in open banking is all of a sudden lots of other people other than banks and corporates get involved. And it's defining those entities, defining their roles on what they can do and what they can't do is going to be key. So having that to a different group is important and relevant. Overall, I wonder whether the variable repeat payment system will become direct debits on steroids. I do hope so.
That's a great point, Jack. And it's fun to kind of look back at why this is needed, because it's just a couple of years ago that the now outgoing Starling Bank chair, Anne Bowden, told UK MPs in a Treasury Select Committee that open banking had not been a success. And I think one of her comments was, open banking is a lesson of us trying to make something work when halfway through the project, we realized it wasn't going to work. So obviously now the government's giving it another push, and banks are, what the banks are telling us is that there is interest in this. I was reading an article about payments that had some comments from people from NatWest, the UK bank, who noted that from their perspective, open banking payments are increasing 4 to 6% a month, and that the total volume of open banking payments since open banking began, 60% of all of the payments were in 2022. It's not dead in the water, but it does need a bit of encouragement, which I think is what the government and the various payments associations and bodies are doing with this. So hopefully it will be a success. And I think, as Jack underlined, the VRP is a really smart way of actually improving the payments infrastructure in this country.
There's one final point I think I ought to make is that the VRP is going to be an opportunity for corporates to actually improve the relationship with their customers and their suppliers. And it's managing that is going to be key in the UK. It's an example of something that they need to do worldwide. But in the UK, this opportunity is really opening up, not to be missed, I think, to be monitored and jumped on as soon as you can.
Absolutely. And I think we should maybe just outline what a VRP actually is for people that don't know, because it is quite, relatively new. It's basically a payment instruction that lets an account holder permit authorized payment providers to connect their account and make payments on behalf in line with pre-agreed limits. So the whole concept behind them is that they'll provide a faster and more secure payment experience, but sort of playing in that direct debit space, as you said, Jack. So fascinating to see how this might take off.
Those are thought-provoking comments, Jack and Ben. Excellent analysis. Moving forward to the Next news item for today's conversation that revolves around SWIFT exploring blockchain interoperability. SWIFT has announced that it is collaborating with their global community to explore blockchain interoperability for seamless tokenized asset settlements. The financial messaging services provider said that institutional investors are increasingly considering investments in tokenized assets as they seek alternative investments. However, investors face a complex challenge since the tokenized assets are tracked on different blockchain networks that are not interoperable. So, Jack, SWIFT wants to overcome the interoperability challenges among blockchains, which is key to the long-term scalability of the market. Do you think SWIFT's collaboration with major financial institutions and associations will help remove friction in international transactions?
It'll start, but the fundamental problem of the difference between the blockchain systems remains. That's why I think the partnership with Chainlink is so important. And this is why corporates can start to think about more relaxed, being tied into one currency. They can go across the whole space. But it has to be very carefully managed. The interesting thing for me from the SWIFT point of view is this shows how SWIFT is trying, and they said it to me several times in different ways. We are trying to be the international connector of the payments worldwide. So they want to link in Visa and MasterCard and Chainlink and et cetera, et cetera. And this is just another step in the way they're trying to do it. I wish them well. I think this is very complex, but Chainlink is a good start.
Yeah, the financial services sector is definitely gearing up for a tokenized future, and the benefit, particularly in I think the asset management space, is digitizing assets enables like huge assets to be tokenized, literally split into smaller parts. So it kind of opens up the market to a whole swathe of new investors that perhaps couldn't be involved before, which is great. And obviously the digitized side of tokenization means that hopefully settlement times can come down, can have a dramatic impact on reconciliations and promote automation and get that transparency to securities trading more broadly. So I think it's an interesting space that's definitely going to grow. Worth noting that there's quite a few different initiatives in this space trying to answer that question about how do we have sort of standardization? How do we have one place to go to and make sure that we don't have to log in and out of so many different platforms, which itself is creating a number of platforms. Last month, there was the launch of the Canton network, which again has like a huge list of participants from across financial services and beyond. So people like BNP Paribas, Broadridge, Deloitte, Goldman Sachs, Microsoft, even the Digital Dollar Project, and many more are part of the Canton network. And they've pitched themselves as like a global blockchain network of networks for financial market participants and institutional assets. So I think, that's pretty interesting approach as well. So what we're seeing, I suppose, is it's another attempt to try and build that connectivity in this space that SWIFT is looking at, coming at it from maybe a slightly different direction. So I think it's a fascinating sort of space race to sit back and watch and see which experiments thrive and which perhaps fade away over a year or two.
Yeah, I think this development raises a question. Will SWIFT actually link up to Canton? So you just get groups of just linking all the networks together. And that's where SWIFT see their role. I can't see any single one like Canton or Chainlink surviving on their own. They're going to have to accept a lesser role just to get their whole network working globally.
That's a fascinating comment. Moving forward to the next story that merits discussion is about Trovata, a bank API and cash management provider, announcing its expansion into the large corporate global treasury market, focusing on end-to-end integration with enterprise ERP systems. A statement from Trovata named SAP and Oracle as two of these systems. As digital transformation in finance and banking continues to gain momentum, Trovata is expanding its services to meet market demand and provide support for large corporate customers. Ben, how do you think Trovata's move into upstream markets with multi-bank API integration will impact corporate treasury?
Yeah, it's interesting, isn't it, Push? I think in the announcement for this integration, Trovata commented that they were moving up market. So having that integration with these top-end ERPs does give them that access to large corporates. And we know that corporates are very interested in what APIs can bring to the treasury function. This year's annual survey by the European Association of Corporate Treasurers reported that in terms of technological innovations in the next 12 months, APIs are the second highest priority, trailing only data analytics, which I suppose is to be expected. So the impact that APIs can have to enhance visibility over cash flow and boost reporting capabilities, I think that those are areas that are really kind of well understood now in the treasury sphere, and is something that corporates are targeting to kind of find those efficiencies. One thing, just to link it back maybe to our previous conversation, APIs are also another area where standardization can be an issue. So these multi-bank solutions where the provider is essentially offering like a library of corporate banking APIs directly from the TMS or ERP could be a way around that issue, just as long as the provider has the APIs for every banking partner that you as a corporate treasurer are dealing with. So that's the thing that treasurers need to sort of investigate and get under the hood of if they're thinking of switching on an integration like this.
Yeah, that point about matching your banking network with what the Trovata or any other supplier provides is the key here. And it gets me wondering whether, in fact, you're going to have 2 or 3 suppliers to get your full multi-bank APIs, which makes me worry, really, because that sounds messy, which is why I'm inclined to think of people like Swift, who can do the whole scale, the whole thing. I think Swift's role might actually become very important here.
Definitely from a standardization perspective and like being able to sort of manage that whole ecosystem, I'm sure. I mean, what treasurers, I suppose, want is if they have 2 or 3 of these different providers like a Trovata and other multi-bank API integrations, can they see everything on one dashboard from their TMS? If they can, that's great. If they can't, then you're taking one step back as you're trying to take one step forward. So that's the question to answer.
That indeed is the question to answer, one dashboard. Let's move forward to the 5th topic for today, which is about the future of payment success, wherein forward-thinking CFOs are actively working towards embracing innovative digital payments technologies such as ePayables and real-time payments to foster supplier and customer relationships while positioning for digital success. While businesses still rely predominantly on credit cards and debit cards, but the future is expected to lie in the realm of e-payables and real-time payments. This is one of the key findings of the survey report titled Digital Payments, Expanding the Payments Palette, a payments and core-centric collaboration. Despite the prevalent use of tried and true payment methods like credit cards and debit cards, many companies recognize that their future success hinges on integrating new payment methods or solutions that their customers and suppliers are beginning to adopt. Ben, do you think the future of payment success lies in the realm of e-payables and real-time payments, or do you think otherwise?
Well, I do think that is the way that things are going, and there are benefits of that. I mean, obviously, a lot of innovation that is changing the way that Treasury operates is coming from the payment space, more specifically the retail payment space, and trying to make that customer journey, to use a horrible phrase, to a sale as frictionless as possible. So I think that's kind of what's being picked up on a little bit in this survey. And particularly with real-time payments, the value of the data that is sent along with the actual money in the transaction is a huge value to corporates. And the more data they can get, the more transparency and visibility around the cash flow you can get, which then means you can find areas to increase efficiency, to forecast better, and generally just be in a better situation with your liquidity. So I think that's the way, like that's the trend that we're seeing. And that kind of, the survey just kind of backs that up, I would say.
Yeah, the thing I highlighted first in this article was that corporates are only dealing with 6 payment methods per company. Well, that's not going to be enough, because the variations in the local payments, online real-time payment systems are going to be huge, and there's going to have to be a way of managing many more than that. The other thing that I pulled out was that the investment plans to increase the realization amongst businesses that you get a broader range of payment systems is crucial. Sure, but they've got to do it with keeping in mind their business model and how the new payment system contributes to their business model, opens up new niches, new ways of doing new business with new people. This is what the development in payment systems is opening up. I think it's changing the role of the corporate treasurer from a admin person to a business opportunity exploiter. And I think this is a good example of what we're starting to see.
Absolutely. That's a great point around how it really sort of supports treasurers being able to demonstrate how they add value to the business, basically being able to think differently and think about new markets, new customers, new ways that the business can actually take itself forward and grow. That's really encouraging, I think.
That's a terrific analysis, Jack. Finally, what is your choice of the biggest or most important story of the past week and why? Jack, can I ask you to answer that first?
The overall conclusion from the topics on the podcast today is what we're seeing is new ways of doing business is opening up, new ways of doing subscriptions with the SVP in the UK. There are a whole series of different opportunities worldwide. And I repeat my point about the fact that I think the big lesson from here is that new technologies, particularly in payment systems, is opening up new business opportunities, and they are huge.
Yeah, I absolutely agree with that point, Jack. And for me, just kind of the shade of that story that was my biggest thing of the week was the sort of the growth of the multi-bank API platforms, and just sort of emphasizing that anything that can make the treasurer's life easier when it comes to monitoring cash flow and reporting is just so important. But can you see all your banks in one place? It's going to come down to that. So let's look forward and see what's possible from the tech providers.
Sorry, my other conclusion is the corporate treasurer's life is getting more difficult, more complex, not simpler, and the role of the technology companies in making it simpler is going to be crucial.
Thank you, Jack and Ben, for your insightful comments and analysis. I, for one, gained a lot out of this podcast, and I assume that our audience will as well. We would like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.